Good morning, Principals of Business and Finance. It is Miss Archer. So on your screen, you see your daily agenda for today. We're going to be doing a do now with the accounting equation. This refers back to yesterday's and the day before's assignment. We have one activity which we'll be doing together, which is the 601 basic accounting questions, and then you'll be completing the 601 financial statement activity on your own. There's also an exit ticket entitled Accounting Systems that you will need to complete once everything is done. As always, all assignments that are posting this week and next week, they are due by May 15th. At the bottom of your screen, you see contact information for Mr. Moore, his email and his remind, and then you also see my contact information, my email, my Google Voice, and my Remind app. Let's begin. All right, so you see your due now, which is right here, and you'll need to complete that. We're going to be working on the 601 basic accounting and financial statement activity together, and then you will be completing the exit ticket once all assignments are done. So the 601 basic accounting has some basic accounting questions that we talked about in day one with accounting, and is pretty much focusing on the assets, equity, and liabilities portion, which is also your accounting equation. Remember, I told you if you don't remember anything else in this accounting section, make sure you know your accounting equation, which is assets equals liabilities. Assets equal equity plus liabilities. So your first question asks you, which of the following is not an asset? So an asset is anything of value that the business owns. So that means building is one, equipment is one, and cash is also one. So that means your answer is D, owner's equity, because owner's equity, even though it is a value to the company, it is not considered an asset. Number 2 states, which of the following items is considered a liability? So a liability is anything that the company or individual owes to somebody else. So cash is an asset. We just saw that in 1. Land is an asset because it is something that the company owns. And we know owner's equity is not an asset, but it is not a liability. So the answer for that question is D, taxes owed. Number 3 gets your brain working some. So number 3 says a business has the following items. The land is $1 million. The machinery is $20,000. The cash is $10,000, and they have 0 debt. You are to find the owner's equity. So go back to the first day sheet that we did, and it gave you the accounting equations if you were missing certain ones. So it gave you the basic accounting equation, which is assets equals liabilities plus owner's equity. If you were missing owner's equity, then the equation is assets minus liabilities. And if you're missing liabilities, it's assets minus owner's equity. So in this case, we're missing owner's equity. So since we're missing owner's equity, we have to add together all the assets. So everything in green is an asset. So you have an asset of land for $1 million. And I'm doing it on my own calculator. You have assets for machinery, which is $20,000. And then you have cash, which is an asset also of $10,000. So that gives you the total of $1,030,000. They have no debt. So you can't, if you take 0 away from something, it's going to leave $1,030,000, which is your owner's equity. Remember, with the assets and liabilities and owner's equity, both parts of the equation have to equal, so they can't be separate. So in this case, the owner's equity is $1,030,000. The assets minus the liability is $1,030,000. Same setup for number 4. It's asking the business has the following items. So land is $1,500,000. Machinery is $30,000. And they have cash of $10,000. So all these things are actual assets. Now they're saying they have a loan for $500,000, which is a liability. So you would have to take that $500,000 from the actual answer that was there before. So your answer for owner's equity is $1,040,000. All right, number 5. Number 5 states a business has the following items, and so they group them all together for you. The owner's equity is $70,000, and the total liabilities is $1,300,000. Well, according to our equation here, we just need to find out what assets are. So we're going to add up owner's equity, which is $700,000, and we're going to add up the liabilities, which is $1,300,000. And that gives you a total of $2 million. Now for this equation, we're finding owner's equity again. So number 6 states they have total liabilities of $5,000 and assets of $45,000. Don't do it backwards and do 5,000 subtract 45,000. You're going to end up with a negative number. So do 45,000 subtract 5,000. That gives them owner's equity of 40,000. So that means when owner's equity and liability is added together on one side of the equation, it's going to give them 45,000. And then on the other side of the equation, the assets will be there, totaling up to 45,000. Remember, both sides have to equal. Now, this is the part that you're going to be responsible for doing. So we're introducing balance sheets and income statements. So balance sheets you guys did yesterday in yesterday's activity, where you put all the assets on one side and the liabilities and owner's equity on another side. So what you're doing is reading the scenario here about Marsha Jones. And don't worry about putting the date down. It's going to ask you what the asset is, and then you're going to have to put the amount. So Marsha Jones is a recent college graduate. She worked during college and managed to save $2,000 in her savings account. The balance of her checking account in cash was $440. During her freshman year, Marsha used a credit card and now owes $1,250 to the credit card company. She also has 2 school loans, one for $5,000 and the other for $3,000. She also has a car loan that started out as $12,500, which she now owes $4,600. Use the information to fill in Marsha's balance sheet below for today's date. So here's where everything is pretty much self-explanatory. Her asset, of course, is her savings account because she has $2,000 in savings. Her other asset is the cash that she has on hand, which is $440 also. And so during her freshman year, it states that she uses a credit card and she has a balance of $1,250 on it. Then it states she has school loans. And so one is for $5,000 and one is for $3,000. So depending on how you want to do it, you can do school loans separate or you can do them together. And then she has the car loan. So this is where it gets a little bit tricky at, because she has a car loan in which it started out being $12,500, but she only owes $4,600 for it. So I'm going to show you how to put that in. Her car loan is actually going to go into 2 spots. So her car is valued at $12,500. So that is an asset to her because that's how much the car is worth. But her car loan, because she still owes $4,600, is what's going to go under the liability section. And you'll run across this as we get a little bit further into accounting, and if you decide to take accounting up as a career later on. What is worth will go under assets, but what the remaining loan is what you're going to have. So now that you got your sheet filled out, you're going to total up all the, and I'm going to take that off because that's confusing. You're going to total up all the assets because then that's going to tell you what should go in this column here. So if you total up all your assets, you have $2,000, you have $440, then you have $12,500. So at the bottom in assets, you should have $14,940. So you know that this side of the accounting equation should also be $14,940. But you don't have owner's equity and you haven't totaled everything up to have liabilities. So real quick, your total liabilities you already have here. So $1,250, $5,000, $3,000, and then her loan of $4,600. So we know her total liabilities equal up to $13,850. We need to find owner's equity. So your part, since I've done the whole sheet, is to figure out what the owner's equity is and place the number there. Now for the second scenario, it is giving you an income statement. And don't panic, this is pretty much the same thing. Just because it's entitled income and expenses, most of this makes sense because you guys should be familiar with some of these scenarios. So the scenario states that Marsha is working a part-time job at a restaurant. She makes on average $200 per week, and her parents send her a monthly allowance of $100. She has the following monthly expenses. So it's already broken down to you what her expenses are. Her cell phone bill is $62. Her gas is $100. Her food is $200. Entertainment is $100. car payment is $200, and her car insurance is $125. You're going to fill in Marsha's income statement. Now, they gave you what all her expenses are. They literally stated that these are her monthly expenses. So you're going to put the name in one column and the dollar amount in the other and total up her expenses. Now, her income, you're going to have to use a little bit of math to do, because it says she makes on average $200 per week. There are normally 4 weeks in a month, so you're going to have to do $200 times 4 to get what her whole income is for her job. So you would do something in the way of job 200 times 4, or you would just do whatever her monthly income is, or you could just put monthly income. It doesn't matter what you do. And you would put the dollar amount on this side. Her parents also send her monthly allowance. So you would put monthly allowance here, and then how much it is, and total up her revenue. And so that's what she's bought in. And then once you figured out what all her expenses are, you're going to total all the expenses here, and then you're going to subtract the red, which is her revenue, from from the yellow, which will give you her net income, because in this case, she is bringing in more money than she is putting out, and that's what a net income is. Now, in some case that her expenses total more than what her income was, then it would be a net loss. So as always, once you complete the assignments, make sure you are submitting them in the proper location so I can grade them and return them back to you. Guys, please be very mindful that even though we are out of school currently, work is still going on. So all the electronic assignments are due May 15th. If by some chance you need an extension, let me know and I can make arrangements to give you an extension. Paper assignments, I will give you a guy's date on when they are due. As always, I pray that you and your families are being safe and sound during this time of COVID-19. I know that this pandemic and this new normal is not normal for anybody. So I pray for you guys, and I pray that you guys are being safe and sound. Continue to do your work. Reach out to me if you have any questions or concern. The Zoom email that I sent you guys out, that is for every day. So if you need help throughout the day and you're doing your work, I am normally on at any given point in time. So definitely reach out to me and find me there. As always, I hope you guys are staying safe and sound. Continue to do your work, and I will see you guys in the classroom.